Hey everyone, and welcome to Project Premium Harvest. My name is Matt. In today's video, I'm going to be doing what you guys have been asking for, and that is for CONY. Right, so if you're not familiar with CONY, CONY is the yieldmax coin option income strategy ETF. If you're not familiar with Coin, that's Coinbase, where they trade crypto, right? And that's what we're going to be talking about. What is this video going to be about? We're going to be talking about, can we retire on an investment in CONY, right? We're going to talk about a $1,000 through $8 million investment and somewhere in between. Right, we're going to talk about the distributions we're going to be receiving while owning CONY. Can you retire off this fund without reinvesting back into it? We're going to talk about tax considerations, and then that's kind of the start. So let's begin. All right, so looking at the CONY, right, Coin Option Income Strategy ETF, right, currently it's trading at $12.05. We're going to annotate that number because that is what we're going to use for some of our NAV erosion calculations. Right, and then let's look at this highest point in March 28th, 2024. Where the fund was trading at $29.64. I'm going to annotate this number, and we're going to use this for our worst case scenario. Say, for example, you bought at this level. Some people actually have, right? So it's not like this hasn't happened to people before, but we're going to use this number, and then we're going to make a determination. If you bought at this number, would you still be making money, and could you still retire off of it, even if you bought at the 52-week high? So we're going to come with that calculation. And then the average trading range, kind of how I mentioned earlier, I think, or if I don't remember if I mentioned it earlier, but I think we're going to go with like that 1450 mark. So let's dive into the numbers a little deeper. So if we look here, right, starting around September, it looks like CONY has definitely stabilized a little bit. This is definitely near that time where yieldmax did the prospectus change, and from that prospectus change, it has been pretty stable. Somewhere hovering between $11 and $18. But I think a good number to a good average to buy in at, we'll save, $14. We'll go with 14. Cool. Now let's run over the spreadsheet and start talking about these numbers and what the values look like so that we can make an educated decision and can we retire off of investing in this fund. All right, here's an overview of what we're going to talk about, right? So I have two different columns here, right? One for the average $14.50 investment. The other one is the worst case scenario, $29.64 investments. We're going to look at these two different charts, right, to determine, hey, can we retire off the investment, and what does like the different $1,000 investment to $1 million investment look like? So now let's scroll in and actually look at the numbers. Enhance. Let's see. One more. Just don't want it to be too skinny. All right, I guess that's good enough, right? What I did for you guys is I looked at every single distribution that CONY paid out since its inception, right? So the first distribution payment was October 16th, 2023, right? And that was a $1.209 distribution per share. And then all the way into February 7th, which is the payment's going to be tomorrow. But basically, I took all those distributions and then added them up so that we can get this beautiful total distribution for 17 payments of 26.9266, right? So let me zoom in a little more. All right, so now let's crunch these numbers. So for the total premium, this was for 17 months or 17 payments, right? We already mentioned it. That's 26.9266. If we look at that as like a monthly yield or a per payment basis, that is 1.5839. So you're basically making $1.50, almost $1.60 per share per month, which is actually pretty high, right? It's better than nvdy and msty. Msty is kind of like the outlier, kind of paying a lot, but it's doing way better than any other fund, right? But now let's look at if we did a estimated yearly payment, right? So the way that yieldmax works is they do a payment every 4 weeks. So the way we calculate this is if you do 52 weeks in a year divided by 4, that's going to be 13 payments. Some of these funds are going to have 13. Some of them are going to have 14, right? It just depends on where and when that fund falls throughout the year, right? So I'm just going to go with 13. Cool. So over a year period with that specific distribution that we calculated, we're going to net about $20.5909 per share, right? That's what the distribution is. And if we look at that as a distribution rate, that's 142%. That is pretty great. Now let's talk about the bad part, the negative, NAV erosion, right? So we talked about buying the share at $14.50. However, the current share price is trading at $12.05, right? I remember to annotate that number. So we're going to have to subtract 1450 to 1209, and that's going to be the NAV erosion from that time period, right? So that's about a negative $2.45 from that the NAV, right? And if you look at that as a percentage, that's negative 16.89%. We'll skip return on capital and investment in a second here. But then instead of like, because this was just from, this is kind of just like a number we just made up here, but I just looked at the last year from Robinhood, and that NAV erosion was about negative $7.24 per share. And then if you look at that as a percentage, that's negative 37.54%. If we're comparing that to that 1450 share price we bought in at, right? So let's talk about return of capital, right? So I'm actually going to go back to the yieldmax site and show you guys where to look at supplemental tax information, which is the 19A1 form, which tells you all about return of capital and then the net distribution. So let me head over there. All right, so now that we're back on the CONY yieldmax site, let's scroll all the way down to supplemental tax information. So this little marker there, and then let's find CONY, should be up here. So yieldmax, which I hate that they don't keep these forms up to date. The last one was from October 2024, but we will still use that as a point of reference, right? So the way these return of capital forms work, these 19A1 forms, you have two sections. You have one that's the payable month, right? And then you have one that's a cumulative for the year. So if you really want to look at and calculate your own numbers, they should be creating these 19A1 forms every single month, so then you can calculate the numbers. However, if you're lazy like me, you just go to the cumulative distributions for that fiscal year, and it's just going to tell you, right? So this first part, this 54.42%, that's the estimated net investment income. So basically what this means is from the distributions you receive or that premium you receive, 54.42% is the taxable amount, and then you're taxed at your ordinary income tax brackets, right? And this 45.58%, this is the return of capital. So this is money that you don't have to pay tax on. So you're pretty much exempt from it, because basically return of capital is the fund paying you back your own money. That's the way like the IRS and the fund managers look at it. And then the net distribution, you pay that just at your normal income tax bracket, ordinary income tax bracket. Cool. So now we have that out of the way. Let's continue forward with back in the spreadsheet. So now that we're back at the spreadsheet, I populated those numbers, and then you're going to see this 54.42% once we get to the actual investment numbers. Cool. So we kind of came up with those numbers, and let's take a look at what the net is after we take into consideration NAV erosion, right? So if we're trying to retire on this fund, right? NAV erosion, the way I perceive it and the way we have to combat it is you have to reinvest your distributions back into the fund so that you don't lose the money. That's what the best method is. You can pull that money off the side, right? But ideally, you want to reinvest back into the fund so that you can produce more premium over time, right? But that's just kind of like the thought process here, because the intent is we want to reinvest the exact amount so that we can combat that NAV erosion, and everything else after that reinvestment, we want to pull that out, and then we want to actually use it to retire, go on vacation, passion project, hobby project. You still want to fix cars, you have like money to do your hobbies, just things like that, right? So now let's dive into those numbers, right? So after we take into consideration the NAV erosion, the total net premium is actually $13.3509 per share, right? And if we look at that through a per month per payment basis, you're basically making a $1.0269 per share, right? Which is actually pretty good. It's still pretty good, even with the NAV erosion considerations, right? If you look at that as a distribution rate, that's 92.07%. And then estimate of yearly premium, we already kind of came up with that number. It's the same one. Cool. Now let's talk about the negative part. Let's talk about the worst case scenario, right? These funds have only been out, well, at least CONY, for 17 months, right? So coming up into 2 years, so relatively infant, right? So let's take a look, right? If we actually invested at the worst time at that 52-week high. So let me scroll up. All right, so we have that marker, 29.64. And so this is how I did it. Basically, that spike of $29.64 was late March, right? So I calculated the premium, the next premium afterwards. So that was April all the way until currently the next premium is going to be paid out tomorrow, which is February 7th, 2025, right? So if we combine all of those distribution payments, that's $16.7485 per share. See, that's pretty good, right? So let's throw this into these calculators. And if that's about 11 months / payments, and if we look at that monthly yield from those 11 payments, that's actually 1.522, which is still equivalent to what we were seeing on the normal levels when we invested at that $14.50 mark. Cool, right? So if we were to estimate that $1.522 distribution over 13 payments, right? We were almost there anyways. That's a 19.7936 distribution per share per year, right? And if you look at that as a distribution rate compared to, so basically take this 19.7936 and then we divide that into that 29.64, and then we get that percentage at 66.78% distribution rate. Now let's talk about NAV erosion. Cool. So the NAV erosion, we're basically taking that $29.64 and we're subtracting it against that current share price of $12.05, right? So that's negative $17.59. If you look at that as a percentage, that's 59.34%. See, the return of capital and net investment are still going to be the same because it's still the same fund, right? And over the year period, because it's about 11 months, I just kind of kept the number simple and left them exactly the same. So then let's look at the net, right? So kind of as I explained for that first column here with that, if we were to buy shares at $14.50, for this column where we're trying to invest that $29.64, right? If we're gonna try to retire on this, we're gonna try to minimize the NAV erosion. We don't want to actually lose our capital, right? Because over time, if there's too much NAV erosion and the distribution isn't paying high enough to combat the NAV erosion, you're eventually gonna go to $0, right? So we're gonna take a look. If we bought this at the absolute worst mark, can we still break even or make money or even retire? So let's look at it. So this total net premium, right? So taking all into consideration, at the end of the day, you would, if you bought in at the worst time in CONY back in March of 2024, you would still have a net distribution of 2.2036, right? That is still, at least you didn't lose money, right? That's the way I'm looking at it. You're still net $2.02 per share for the year. If we look at that as like a monthly yield, that's about 0.165. And then if we look at that as a distribution rate, that's 7.4%, right? An estimated yearly premium, same. Cool. Now that we got those numbers out of the way, let's see what these numbers would look like if we're actually going to use money. Let's put the numbers in the charts and then let's take a look. All right, here we are. Let's go. So let's look at this first chart, right? I'm just going to reiterate some of the data points we have already mentioned, right? So we're investing into CONY. The purchase price is going to be at $14.50. Premium yield 92.07%. The net monthly premium is 1.0269, and the net yearly is $13.35 per share, right? And then scroll a little bit more, and the tax distributions at ordinary income levels is 54.42%. Cool. Let me put that right there. Perfect. All right. Now let's get started. Let me zoom in so that we don't hurt our eyes. And bingo bango. All right. So for a $1,000 investment into CONY, we're going to own 68.96 shares. That's going to be a monthly income of $70.82. Over a year period, that's going to be $920.75, right? Because of return of capital considerations, and we have to pay tax on 54.45% of the distribution at ordinary income levels, right? That 54.42% of 920 is $501.07. And because that $500 falls into that $0 to $11,000 tax bracket, we're going to be taxed at 10%. Cool. right? But then if we look at the actual tax percentage with return of capital considerations and that 10% tax on that net distribution, that's only 5.755% of that total premium. So that's actually not too bad. Return of capital definitely lowers the tax burden on these funds, which is kind of a benefit. But let's keep going, guys. So for a $10,000 investment, right, we're going to own 689.66 shares. That's a monthly income of $708.21 over a year period. That's $9,207.52. Because of the return of capital considerations, we have to pay taxes on 54.42% of the net distribution of that $9,000, $9,207. So that's going to be, we're going to pay taxes on $5,010.73, right? Because that $5,000 falls into that $0 to $11,000 mark. We're going to have to pay only 10% of that $5,000, which is $501.07. Cool. So now that we get the hang of like taxes and these distributions, I'm going to go a little faster. But yeah, but going back to the tax percentage is still that 5.755%, right? It's still relatively low for how much money you're making, if you were to ask me. Cool. Okay. So for a $25,000 investment, we're going to own 1,724.14 shares. That's a monthly income of $1,770.52, right? That's a yearly income of $23,018.79, right? Because of return of capital considerations, we have to pay the net distribution on 54.42% of that $23,000, which is $12,526.83, because I have to fix this real quick. All right, guys, I had to make some quick adjustments because this $12,000 went above that $11,000 threshold. So then anything above $11,000 up until $12,526.83 is going to get taxed at that 12% tax bracket. So then we max out that 10% bracket, and then we only have to pay $183.12 in that 12% bracket. Cool. Now that we got that out of the way, now let's go to the $50,000 investment. So for that $50,000 investment, we're going to own 3,448 shares. That's going to be a monthly income of $3,541.03, right? That's a yearly income of $46,037.59. Because of return of capital considerations, where you have to pay 54.42% of the net distribution at ordinary income tax levels. We have to pay taxes on $25,053.65. That falls into two different tax brackets. And then in total, we're going to be paying about $2,786.44 in taxes. Right? And if we look at that as a tax percentage, that's 6.442%. Now looking at this $100,000 investment into CONY, we're going to own 6,897 shares. That's going to be a monthly income of $7,082.07 and a yearly income of $92,075.17. Right, because of return of capital considerations, we're going to have to pay the net distribution on 54.42%. Right, getting the theme here, guys. Right, of that $92,000, that's $50,107.31, because that $50,000 hits three different tax brackets. We max out two, and then the residual is going to be at this 22%. We're going to have to pay $6,382.89 on taxes for a $92,000 distribution per year. So that's actually not too bad, right? And if we look at that as like a tax percentage, that's only 7.449%. So not too bad at all, right? Definitely going to be more tax advantage if we throw that into a retirement account or like a Roth, but that might not necessarily be the case with some people. Like for me, I'm already maxing out my Roth or my 401k and my Roth IRA with other like long-term investments versus this like Robinhood brokerage is more so my short-term and potentially retire sooner rather than later fund, right? Cool. I'm going to throw myself out of the screen here. I know you guys are going to miss me, but let's talk about that $1 million investment. Let me move this over a tad. Boom. Beautiful. Okay, so for a $1 million investment into CONY, we're going to own 68,966 shares. That's going to be a monthly income of $70,820.69. That's absolutely freaking wild, right? the yearly income of that is going to be $920,751.72. Oh, man, a man can dream it for that. For that number. All right. But because of return of capital considerations, right, we have to pay taxes on 54.42% of this $920,000. We have to pay taxes on $501,073.09, right? We max out like 5 different tax brackets, and then we almost punch through the 5th one, and math is on after the 6th one, right? So basically, if you make about $920,000 in yearly premiums from CONY, you're going to have to pay $147,270.08 in taxes. But at the end of the day, you're still up $773,481.64. And if you look at that as an actual tax percentage taken into consideration return of capital, you're really only paying about 19.04% in taxes. So not too bad. Cool. Now that we got if you were invested at that $14.50 marker, right, and it happened to continue onto that trajectory, right, this is what the numbers would look like. You can retire off of this fund. You definitely can have to reinvest some of the money, but if you look at the net distribution, you're going to be making a ton of money. But the problem is, it's like we don't know how these high income ETFs are going to perform over time. The lower the share price gets for these high income ETFs, the less distribution you're going to make. So when when CONY was trading at $29.64, that's when you were seeing in the highest premiums of like $2.50, close to $3, right? But since this fund has gone down to like $14, the premiums have slowly gone down with it. That's just an observation. So let's go down to the worst case scenario and talk about those numbers. Cool. Just so that we can recap what numbers we're talking about. The purchase price of each share is going to be about that $29.64. Premium yield is 7.4%. We're going to be netting a monthly average of 0.1695. So basically you're close to 17 cents. And then finally, we're going to look at the net yearly is $2.02 and 20 cents. $2.20. Cool. Let's start crunching through. So for that $1,000 CONY investment with the worst case scenario, we're going to own 33.73 shares, monthly income $5.72, yearly $74.35. Right. And because of return of capital considerations, we only have to pay taxes on 54.42% of the distribution. So that's $40.46. And because that $40 falls into that first 10% tax bracket, we are paying about $4.05 in taxes. Cool. For that $10,000 investment, we're going to own 337.38 shares with a monthly income of $57.19. That's a yearly income of $743.45. Because of the return of capital considerations, we're going to have to pay taxes on $404.59. It's in that first tax bracket, so it's 10%. We're only going to have to pay $40.46 in taxes. For the $25,000 investment, we're going to have why is that dollars? Sorry, these things are bugging me. Let me undo this, general. One moment, bear with me. Boom. Cool. So we were at that $25,000 investment. We're going to have 843.45 shares, monthly income of $142.97. That's going to be a yearly income of $1,858.64. Because of the return of capital considerations, I guess I can put my face back here. Because of return of capital considerations, we have to pay taxes on $1,011.47 of that distribution. We end up just paying $101.15 in taxes. Cool. Moving on to that $50,000 investment, we're going to own 1,687 shares. That's going to be a monthly income of $285.93 and a yearly income of $3,717.27, right? Because of return of capital considerations, we have to pay the net 54.42% at ordinary income levels. We have to pay taxes on $2,022.94. Still in that first tax bracket, so it's 10%. So we only have to pay $202.29 in taxes. All right, now we're getting the good stuff, the 100,000, the bigger numbers, what we all strive to be one day. So for a $100,000 investment into CONY at the worst case scenario, you're going to own 3,374 shares. That's going to be a monthly income of $571.86. And that's going to be a yearly income of $7,434.55. Right? Still inside that first tax bracket and return of capital considerations. We're only going to have to pay $404.59 in taxes. Cool. Now for that $1 million investment. So for that $1 million investment, we're going to own 33,738 shares, monthly income of $5,718.62, and a yearly income of $74,345.48, right? Because of return of capital considerations, we only pay taxes on $40,458.81 of that distribution, right? And that distribution falls into two different tax brackets, which we're going to add up. And we're only have to pay $4,635.06 off of a $74,345 distribution. Cool. Now that we kind of talked through these numbers, we're going to discuss, can we retire on this fund? If you buy at the optimal time and then it continues with what it's been doing the last 3 or 4 months, I definitely say yes, right? Even at the worst case scenario, you're still technically making money, but is this enough for you to be happy, right? For $1 million investment, you're only making $74,000. Hard to say. But for me, looking at that normal retirement numbers, if we were buying that $14.50 plus that new prospectus change looks like it's kind of holding that value a little bit better, this might be something I might just throw into like a Roth and forget about it. I don't know. I'll have to think about it. Let's go to the compound calculator and see what the numbers would look like if we were to invest this for a longer period of time. All right, guys, here is the compound calculator for CONY. We're going to be doing a $50,000 investment at that $14.50 per share marker. That's going to give us about 3,448.28 shares, right? We're going to look at that distribution. It's going to be about $20.59 per share, right? Which is a monthly yield of that 1.58 that we mentioned in the previous spreadsheet, right? We're still going to be down about negative 37% on the year because of that's just a loss the year had. And then we're going to have 13 payments because these funds pay every 4 weeks and there's 52 weeks in a year. You do 52 weeks divided by 4, that's 13. Bingo, bango. Let's look at the numbers. All right, so after 1 year of investing into CONY, if you were to reinvest, right, if you're not ready for retirement and you're not ready to pull that money out, oh boy, right? So theoretically, after 1 year, you're going to be making, your account's going to be $157,156.89. I don't know how accurate that's actually going to be, but you know, because the more the fund deteriorates in value, that the distribution is going to be affected, right? So whenever we're getting to these smaller share prices, you're going to able to buy more shares. So that's why it's going to be able to compound more quickly. So I don't know what the right mechanism would be to maybe subtract like what. I'll have to find a calculation to figure out for the share price going down a certain amount, the distribution is also going to go down a certain amount. So I'm going to have to, that's a side project for me, a little homework for me. But basically, after 1 year, we'll just play with it, right? So after 1 year, you know, you're going to have that $157,000. I don't think that's going to be right. But that monthly distribution is going to be about $24,276. For anybody that's actually invested in CONY, let me know what is the real deal. But let's just play with it. So let's do the like 5-year marker, right? Because ideally, hopefully these funds for me hit and I can just retire in 5 years and not have to worry about them. But that is not realistic whatsoever. So we have 100,000 million, that's $37 billion. No way. All right, let me put some more conservative numbers. All right, we'll not make this negative. We'll just put 0, even though that's not right, but cool. So the share price didn't change at all, right? After 1 year of investing, you would still have about $173,482.86, right? And that monthly distribution would be about $18,000. So let's go to the 5-year marker and see what that looks like. So after 5 years investing in this fund, if it has no NAV erosion, which is not going to happen, right? You're going to have about $25 million in the fund and then be making a monthly income of about $2.7 million. Interesting. Let me put the worst case scenario numbers in there and see if that makes it more down to earth. One moment. Okay, so I just put the distribution at that $2.20. So that 2.2036 distribution. So that's going to be a little bit more realistic. Yeah, this is probably what's more likely going to happen. So let's take a look. All right, so after 1 year of investing into CONY, right, at the worst case scenario, your account's going to be at $57,483.14. That's still up, $7,000, and your premium has increased about $90, right? So let's take a look at what it would look like for a 5-year period. So after a 5-year period, your account would be at $100,000, so it would have doubled, right? And you'd be getting a monthly distribution of $1,173.93. Let's do a 10-year period. So let's go 2035. Or the start of, 2036. All right, so after a 10-year period, your account would look like $231,870.17 and a monthly distribution of $2,710.61. It's kind of neat to me. Yeah, let's throw in $1 million, see what happens. Let's mess around a little bit. $1,000, $10,000, $100,000. So if you had $1 million investment into CONY at the worst possible rate, you'd still be making about $13,439 every single month. And after a year, you'd increase your value about $149,000, which is actually pretty good still. Let's look at what the 5-year numbers would look like, and then I'll just wrap up the video after that. So after a 5-year period, you have doubled your money. You're at $2,008,409.27, and then your monthly income is going to be $23,478.68. Cool, guys, that pretty much wraps up the video. I don't really have much more to say on this, right? Some of these numbers, they seemed a little unrealistic, but I mean, if you look at any other compound calculator, they're going to give you something very similar. But let's talk about CONY in general, right? For me, looking at it, can you retire off this fund without reinvesting? No. But if you do reinvest some of the distributions to combat NAV erosion, yes, you can actually make a decent amount of money afterwards, right? So yes, you technically can retire off of it, but you just have to maintain that redistribution rate, right? Taxes are relatively low. I've seen funds that are better than, return of capital, but for making this amount of distributions, as long as these numbers stay the same, this would definitely be something you can retire off of. Would I recommend it? End of the day, that's going to be up to you if you believe in crypto or not. For me, I might throw in like a little small chunk of change in like a Roth IRA, just so I can have some exposure to it. For my brokerage where it's actually like taxed, probably going to avoid it because I'm pretty content with where my account is at. But yeah, guys, that wraps up the video. Hope you enjoyed it. Would love to see some likes, read your comments, and know your thoughts. But yeah, that's the video, guys. Matt out. Thanks for watching.